All right, good day everyone. I believe each and every one of us here have gone through the last video posted on candle range, that's CRT, and I believe each and every one of us here at least have the basic idea what CRT is all about now. If you haven't go through that video, I will kindly advise you to go and watch that video first, at least know what CRT is talking about, at least the basic understanding of CRT before you continue with this second video on structure. And for those that just joined us recently, if you may probably you don't have access to that video, maybe WhatsApp did not allow you to see our previous post, you can go to our WhatsApp Telegram channel, search Zenith Trees on Telegram, and Telegram is going to show you our channel. Go to the last video on CR candle range theory, download that video, go through it, at least have a perfect understanding of what CRT is before you continue with this second video on structure. The reason why I advise you to go and watch that video first, because you everything is like fused together, right? You need to have a perfect understanding of what South is talking about before you come and watch this video on structure, because the hedge we are trying to share with you, our trading strategy here at Zenith Trade, we trade structure and liquidity, and we master structure, then we put liquidity into consideration, and CRT candle range theory is what give us the confluences we fuse together to formulate our trading hedge. So that's why I'm advising you to go and watch that video on CRT first before you come back to continue with this video on structure. So before we dive in proper into structure, I will want us to understand some certain concepts on structure. As I've said earlier, I say structure. If you understand structure perfectly and you're able to mark it correctly, believe you mean you have solved like 60 to 70% of your problem with trading. The only areas you need to work on after mastering structure and you being able to mark it out correctly will be maybe your psychology, your risk management, your trading plan, and maybe some other related things pertaining to trading. But if you're able to master structure, believe you mean you do well trading the financial market. So we need to understand some certain concepts before we dive in proper to marking out structure with a schematic diagram. So we need to know what a valid major high is, a minor high, a valid major low, a minor low, a strong high and low. We have a major trend, a minor trend. So let's look at this each of these concepts one by one. So what is a valid major high? A valid major high is a high that sweep liquidity of its previous high and break structure to the opposing side. So now breaking structure to the opposing side can be a break of structure, it can be a liquidity sweep. You know, some people do differentiate this. Maybe if they say a break of structure, they are talking about a break with a body closure, right? That's a liquidity run. But if you're talking about sweep, that is when a candle sweep liquidity with a wick, but the body closes inside the range. So this breaking to the opposing side, it can be a liquidity sweep, it can be a body break. And a minor high is a high that did not break structure to the opposing side. So this is, let me represent this with a schematic diagram so that we can understand it before we proceed. Let's say this is a bullish order flow, price creating high high, high lows, high high, high lows, high high, high lows, high high, high lows, high high, high lows. So with a bullish order, this is a bullish order flow, and our expectation is creating, if it stop here, it will continue with this bullish trend. But look at these highs that price created here. Example, look at this very high here. We can see that this high is a major high pertaining to our definition of being able to sweep liquidity of the previous high and break structure. And also this high is a major high. Let's say price first of all sweep this low like this, sweep this low like this, then before pushing further. So here now, why are these two highs major high? From our definition, it means they are able to sweep liquidity of the previous high, then break structure to the opposing side. I can say it can be a body break, can be a sweep. This is uptrend. Now it means in this regard it is sweep, right? They sweep liquidity of the previous high, then they sweep liquidity of the opposing structure as well before moving further. That makes them a strong, a major high. The other highs are minor high because they are not able to sweep liquidity of the opposing structure. Like these highs here, you can see this high, these first three highs, you can see they are not able to sweep liquidity of the low before they reverses. But this particular high is able to sweep liquidity of this low before moving further. this high too is able to sweep liquidity of this low before moving further. So they sweep liquidity of their previous high and also break structure to the opposing side. What they mean by sweep liquidity of the previous high, they're able to sweep liquidity here before moving, right? They sweep liquidity, this high, sweep liquidity of this high like this. This is also a form of sweep. Because this is uptrend, some people will call it break. Here is the break is sweep because there is liquidity on top of this high. So it sweep here and also sweep this low before moving high, before moving bullish. Now this high too sweep here and also sweep the low before moving bullish. So the ability of being able to sweep both sides of the structure make this high a major high. Sweep here and it sweep this recent low before moving up. This high to sweep here and sweep this low before moving up. So these two highs is what we refer to as major high in this example, and the remaining highs here that you could not sweep their lows before reversing, they are minor highs. So a minor high is a high that did not break structure to the opposing side. You can differentiate between a major high and a minor high in this regard. Now I believe we understand this. So a valid major low should be the opposite. This is bullish, then the opposite will be what? Bearish, right? So we look at it, we look at it this way. Let's look at a valid major low. A valid major low is a low that sweep liquidity of the previous low and break structure to the opposing side. So look at it this way. This 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 is a low, create a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. All right. So here now we have this high here. We have this high as a major. Okay, we have this low as a major low, right? We have this low as a major low. This low is not a major low because it was not able to sweep the liquidity of the previous high. We have this low as a major low, right? So in this case, how many major lows do we have? We have two major lows. Why are they major low? Because they're able to sweep liquidity of the previous high before moving uh, down, before moving downward, because this is a bearish trend. So that high is able to sweep liquidity of its previous high before going down. So a valid major low is a low that sweep liquidity of the previous low and also breaks structure to the opposing side. So they sweep liquidity of this low, breaks structure to the opposing side, and also sweep liquidity of this low. Here too, this low sweep liquidity of this low and come here to sweep liquidity of this high before moving down. The ones that was not able to sweep liquidity of their previous high before moving down, they are minor highs, and those are internal structures. So when we go to the live chart, or when we go and explain it further in the schematic diagrams below, we will understand it properly why those ones they are minor highs, and yeah, minor highs, and why those ones are major highs. We will trading from major highs towards, we will trading from a strong structure to a minor structure, right, to a weak structure. We'll be trading from a strong structure to a weak structure. So strong highs and low, strong highs and low, these are highs and low that should hold and be protected and not broken. They are highs and low that should hold, protected and not broken. Note that for a high low should become strong, it must sweep liquidity of its previous structure, right? For highs and low to be strong, it must sweep liquidity of its previous structure. They are making reference to the major highs and low. They sweep liquidity of the previous structure and also broke structure to the opposing side. Now, in an uptrend, a major low is strong, a major high is weak. In an uptrend, a major low is strong, a major high is weak, right? We are expected to be trading from a strong structure targeting a weak structure. In an uptrend, we have major high, we have major low, but we anticipate that all the major highs will be taken out because price is bullish, price is going up. So the major lows are the strong lows. In an uptrend, we only have strong lows, we don't have strong highs. All the major highs in an uptrend, they are weak highs because price will definitely take them out. Price will definitely take them out. Then for downtrend, all the major highs are strong and all the major lows are weak. Why? We anticipate that price will always take out the major lows because the other flow is bearish. So all the strong highs will definitely take out the major lows. All the strong highs will definitely take out the major lows. So in the downtrend, major low they are weak, whereby strong highs, major highs are strong. Now, all strong highs and low are major highs and low, but not all major highs and low are strong highs and low, right? In an uptrend, we have strong highs, strong lows only. In an uptrend, we have strong highs only, strong lows only. And in the downtrend, we have strong highs only. We don't have strong lows in the downtrend. We only have weak major lows. And in the uptrend, we have strong lows and we have weak major highs. I believe you understand this. Let me give you details about what I've just explained now in the theoretical form. Let me use this schematic diagram to explain it better. So this is a bullish order flow. This is a bullish order flow. So we see price moving from this structure, right, creating a higher high, retraces, break these previous highs before coming back to see this low. This low now is what refers to as inducement. Is what refers to as an inducement, and this movement is a complete CP, a complete continuation pattern, or you can call it a range. This is a complete range now on higher time frame like daily. If you check, if you turn this, if you go to the live chart and turn your chart to daily, you see that what you are seeing on your 4H or M15 like this is going to be a single candle. So this is a complete range. Price move from this structure, created a high, retraces back, break that structure up before coming back to take this pullback that was created. So this pullback, this low that was created as a pullback is referred to as inducement. And then price must always come back to come and take out this previous low that was created in form of inducement. So this is a major high now. This is a major high I've marked. Why is it a major high? It sweep the liquidity of this previous high, and it's also able to sweep liquidity of the inducement before moving further, right? So this is a major high. This is a major low. Why is this a major low? It sweep liquidity of this previous low, then also able to break structure to the opposing side. That makes it a major low. Then you can see this low high here. This high, as it was coming down, it wasn't able to sweep any liquidity here. It wasn't able to sweep any liquidity of the low before reversing. So it is an internal structure in this way. So this is just a complete straight leg in our structure marking. This is a complete straight leg, right? So now it created a high here. This high is able to sweep liquidity of this previous high. It's able to break structure coming down before moving further. So this able to break structure make this high a major high, right? So this is a major high, but not a strong high. As I've said earlier, I said all major highs in an uptrend, they are weak highs because we anticipate that a strong low will definitely break them. In an uptrend, we only have a strong major lows. Then in the downtrend, we have strong major highs. In an uptrend, we have strong major lows and weak major highs. In the downtrend, we have strong major highs and weak major lows, right? So let's proceed. Now, price continue to do the same thing. I say this is a continuation pattern. We have one here. So at each stage, after price created a strong low, that is a complete range. And we anticipate that price will continue to do the same thing. It will create this pattern again. This is another complete range, right? So price will keep on creating these ranges until there's a shift in market structure. All these strong lows we expect them to hold. These are the protected strong lows, and these are the areas we can see CRT to give us confidence to trade, to join the market. These are the areas we expect CRT to give us confirmation to join the price, price, so that it continue with its 4H pro trend. These are the areas. That's why I say we should go back and watch the video of CRT. If you haven't watched CRT, the CRT I'm talking about, it is a conference we are going to see in this strong lows formation for us to join, or reclaim block. When we get to PDRs, we are going to learn about reclaim block entry and CRT. We delve improper into them, but the CRT we have learned, the candle range theory we have learned, these are the areas where the conferences, you should see the conferences here, or as price proceed going up. If it created a valid pullback with an FVG, price objectives, we will also come to know about price objective, but let's know how to mark strong highs and low first. So this a major high and low, you know how their formation look like. So before we proceed further, let's talk on major trend and minor trend, and let me give you a layman understanding of how you can mark structure, how you can come about picturing structure in your head. So you see the green trend here. Let's refer to this as a major trend. You can see the inner minor trend. If you take this green trend as daily time frame, let's assume this green trend is a daily time frame. So the inner trend, the inner minor trend should be like 4 hour M15. It's relative. You can take the 4H as the green line, the green trend as 4H time frame. Then the inner dotted line trend should be M15, 15 minutes time frame. So now, if you are marking your structure, if you're marking your structure, you can see the major highs and low, right? And what qualifies a major, a high to be major, sweeping liquidity of the previous high, breaking structure to the opposing side. Sweeping this one that do not sweep, that do not break structure to the opposing side, they are minor highs. You can see that they are internal structures. They're just mere pullback that were not able to break structure before moving, before reversing. You can see them here. You see the internal structure. So the eye that did not break structure to the opposing side, those ones, they are internal structure. And you see, that's what our major trend is telling us now, that the only major highs and low is what we connected together to form this major trend. The major highs and low is what we connected together to form this major trend. So in a major trend, you are not expected to see internal structures. Internal is when you move to your lower time frame, you will now see, okay, this is an internal structure, this is a major structure, right? This is an external structure, this is an internal structure, and this is an external structure. So all the major eyes here, they are weak eyes because we expect price to take them out. We expect this strong lows to take them as price is going up until the objective of this movement is complete. Until the objective of this movement is complete. So this is a major trend and this is a minor trend. Now, for a layman, let me give you a detailed what's it called, explanation of how you are going to picture structure, or you being able to mark it correctly, how you're going to picture it in your mind. You see the letter A, B, C, D to M, your letter M. Just picture your uptrend formation in forms of letter M, because this is basically what you're going to see in form of a letter M, right? So let's assume this is your range, but in this case, this part of your letter M, this I will be, let's produce it up to indicate a break of previous I, and this part of your letter M, this last leg, let's shift it up like this to indicate what, a higher low. But this higher low is going to sweep liquidity of this minor structure here, because this middle part of your M, this low now, it is the pullback this is the pullback that created liquidity here, and we expect the last leg of your letter M to come back to sweep it, on a time frame like M15. You won't see it in daily time frame like this, because all this complete CP that you're seeing on daily time frame is going to be a single candle. It's going to be a single candle. But when you turn your time frame to M15, 15-minute time frame, you're going to see the clear details. So this is what price is basically doing. For you to master structure properly on how to mark it, just picture it in form of an M. That is if it is going up, if it is uptrend. So here, this is your major high now. This is your major low, and major low in uptrend is strong. So you expect to trade from a strong structure targeting a weak structure. We have already said that all major lows in an uptrend, they are strong lows, and all the major highs, they are weak highs, because we expect that price will definitely go and take out all the weak major highs, right? So this is how you're going to picture structure in your head as a layman. Now, there are sometimes price will create what we call structural inducement. Maybe before the movement of this impulsive move, there is a little pullback here, right? So sometimes price will come back for this structural inducement, or some people do call it engineered liquidity. It's not in all cases actually, but sometimes prices do this. Then if there is a structural inducement this way, maybe attached to this leg, this impulsive move, then we expect that sometime price will come down, this leg of your M will come down to sweep this structural inducement before moving further, right? Before moving further. But as the case may be, there's a structural inducement or there is a normal uh, low here as in form of liquidity. Whichever one the price sweep, Once it has given you a confirmation as a CLT to enter, you can then enter, because CLT must give you confluence on 4H before you enter. So if it has swept this low, if the CLT has not given you confirmation to enter, you have to patient. If it sweep this low and it's also aiming to come and sweep the structural inducement, fine. Both of our strategies, they must give you confirmation before you proceed. They won't just sweep and you enter. No, the CLT will give you a confirmation. The CLT is a confluence to give you a confirmation to enter, and also our reclaim block will also give you a confirmation. A reclaim block will most attempts give you an inverse fair value gap here, or BPR, a balanced price range. We have not got to that. When we go to PDRs, we are going to understand it better. So the both techniques we are using as entry must give you confirmation. Now that you have known what CLT is, the candle, the 4H candle must close inside after sweeping liquidity for you to enter. And if it is a reclaim block, the price on M15 must have shifted bullish, right, to confirm 4H pro trend, right? Because when price shifted bearish here, that's a confirmation that, okay, your 4H counter trend is about to pull back. Your 4H trend is about to push back. So it is a confirmation for your 4H counter trend. But I won't advise you to prioritize trading CLT against the 4H, because sometimes it will reverse it without taking the inducement, the liquidity first. Because there are some times this your letter M is not going to form just like this. It will go like this, create a lot of middle structures, right, as minor structures before finally coming to take out one of them. So I will not advise you to trade CLT against 4H before finally coming to take one of them. If it has taken one of them, it will abandon these remaining ones. So the letter M formation, sometimes the middle structure used to be more than one. It will create series of minor lows here before finally giving you the last strong low. After it has given you the last strong low, all these one, their liquidities that will be grabbed later, it will abandon them. So the high probability CLT I would advise you to prioritize is the one that after taking sweeping the liquidity and giving you a strong confirmation that this is a strong low before you join. Are you with me? So as a layman, this is how you're going to picture your what's it called, your uptrend structure, because price will definitely continue to go on to create this pattern again and again until there's a shift in trend. Price will definitely go on to create this pattern. Let me delete this so that we understand the idea behind structure. Price will definitely go on to create this pattern. You can see that is our first CP, but this time around, this one will be above. Let me delete this too. That is a complete range. In higher time frame like daily, you're going to see them as a single candle, but on M15 you will see it like this. So price will go on to create, this major high now is higher than this high, and this low is higher than this low. This is a low, higher low, lower high. This is a low. This is high, low, higher low, higher high, higher low. So price will continue to go on to create this pattern again and again until there is a shift in market structure. So these places, these are strong lows where CLT is going to give you a confirmation to join, So just picture your structure in form of a letter M. Picture it in form of a letter M going up, where the last head of the M will be profited up, represent break of previous high, and the last leg will come back to sweep the liquidity. I told you there are some terms that is what we call structural inducement that will be taken out, and there are some terms that will not be structural inducement, and there is some time this middle M is not going to be only one. It will create series of minor structures inside, minor lows, minor highs before finally coming back. So you need to understand all these things. But that's the for bearish, it's going to be in form of letter W doing the same thing. For bearish, it's going to be in form of letter W doing the same thing. Price will create major low. Any low that come back to sweep liquidity, it will be the major strong high. Let me give you a schematic diagram not to confuse you. For bearish trend, it's going to do the same thing. It will give you this, this is your normal letter W. For in terms of structure, this low will be shifted will be propagated down. Then this one will only come to sweep this eye. We come to sweep this eye like this. So where is our major low now? This is our major low, and this is our major high. What makes this one a major low, right? Because able to sweep here, it's able to take this place out before coming to sweep this high. So both sides of the structures were swept before going down. Now this is a minor low. Why is it a minor low? As it is going up, it was unable to sweep any of the liquidity above this high before reversing. But this is able to sweep liquidity of this high. This makes this one a major but weak, because this is downtrend. We anticipate that as price continue, it will take this one out, it will break it down. So going forward, right? So this is a major strong high now, and it will continue doing the same thing, creating the W pattern again. It will create a minor high, sweep it, then coming back to what? Coming back to sweep this high. This sweep I refer to is a break of structure, but you know there is liquidity. This is a liquidity run, then it will break it, clear the liquidity here before coming to, this is external range, this is internal range. You understand what I'm trying to explain? So this is W pattern. You should picture your downtrend on. Your uptrend, picture it in form of letter M, but you know I've drawn it. The letter M will be what? We the last part of the I will be protruded I to indicate a what? Break of previous I, then before coming to sweep the low, which is the endorsement. Now this is how you're going to picture it as a layman. This is how structure is, how to mark your major highs and major lows. So you are expected to trade from your major highs. Do not trade from your minor structure. Your minor structure is there to confuse you. Your minor structures will always lead you to the wrong side of the market. Always mark your major structure and trade from them. And as I said, in an uptrend, your strong lows are your major lows are strong, and your major highs are weak. So expect that all the strong lows will take out all the major highs until the price objective is complete. And what is the price objective I'm talking about? Maybe on your daily now, you should be able to know what is the price objective. As price is moving on from internal to external, internal range liquidity to external range liquidity, if it is bearish, then you should know that, okay, let me give you a schematic diagram for that too. Let's say on your daily time frame, on your daily time frame, if price is bearish, if price is bearish, now price is moving from high, creating high, low, lower high, lower low, lower high. Notice the basic what's it called, market structure that everybody know. So here the price objective is to come back, take out the internal range liquidity, come for the external, go to take the internal again, come for the external. So the price objective I'm talking about, you should understand the price objective from the higher time frame, so that when you are on your 4H going up, once price has tapped on the internal range, maybe there's a daily fair value gap here. Once price has tapped on the daily fair value gap, then you should know that the objective here is complete. You don't expect to be following the 4H going up. And when you check the daily time frame, you see that, okay, price has tapped on your 4H daily fair value gap, on your daily fair value gap, and you are still expecting it to surpass this fair value gap, right? That is a wrong expectation. That's a wrong expectation. The moment you are following your 4H going up, once it has tapped on the daily fair value gap, you should expect there should be a shift. There should be market structure shift, right, to facilitate the daily pro trend continuation. That's the downward continuation, right? And once price has break this structure, creating a lower low, you should expect a counter trend pullback to facilitate price to come and tap on another internal range liquidity before moving further, right? So if there is another fair value gap here, and price has break structure, taking out this high, you should expect a pullback. So this is how you're going to, at any pace of price movement, you should be able to determine what is the story of price, where is the current pace of price, and you should be able to determine its objective. Once the objective has been completed, do not expect to continue to follow that trend, that bias, because you should anticipate a market structure shift. I believe you understand what I'm trying to explain here. Once you're able to mark your structure and you know the storyline with regards to the objective of price at inch phase, definitely you will do well trading the financial market. So at each phase of the price movement, understand the storyline and understand the objective for price. After the objective has been completed, do not trade against it. Just be patient. You should expect the market structure shifts after each objective has been completed. Let's assume here now, when price is moving up, right? When price is moving up and it gets to a major high here, CRT has given you a confirmation that okay, M15 shifted bearish. You should know that okay, for M15 to shift bearish here, for M15 to shift, that's to tell you okay, it's going to facilitate 4H pullback. That M15 shifted bearish is telling you okay, this is to facilitate the counter trend pullback of 4H. Now when price come all the way down, sweep this inducement liquidity, and maybe you are willing to trade this as in form of reclaim block, you see a reclaim block formation here, or you see a CRT formation again in this strong low. M15 shifted bullish here is to tell you, is to confirm the 4H swing run pro trend continuation upward. So that's the objective and storyline I'm telling you. You should be able to anticipate. I'm not telling you should anticipate wrongly. Do not fall at the wrong side of the market. But the expectation is you are not following this 4H continuously down and still expecting it to come down if the 4H structure is bullish. Once sweeping this low, you should anticipate a change in direction, but you're not just going to enter like that. Reclaim block will give you the confluence, or CRT is going to give you the confluence as pertaining to the edge we are using here. So these are the ways you can use storyline and also price objective to always be on the right side of the market with regards to okay, if they have drawn liquidity or have they tapped on the external range liquidity, have they mitigated the premium supply, that is if it is bearish trend, or have they mitigated the discount, what's it called, demand, if it is bullish trend. So structure, if you understand structure and you're able to mark it, you being able to understand all these details, valid major high, major low, strong high, and you are following it correctly the way I have explained it, you shouldn't have much problem trading the financial market. Any financial market at all, being it futures, currencies, stocks, commodities, synthetics, every CFD that you know, the price is always doing the same thing. External range liquidity coming for the internal, you know, then you shouldn't have any problem. This is basically all what structure is. Now, for if you have watched the CRT video, now you understand that okay, you can't just trade CRT. When you are trading CRT in line with 4H, then it must always come from this turtle soup candle, must always come from a fair value gap. Let's assume for an uptrend, you can see here I told you that you should find confluence of CRT at your strong lows. Now you know the price history, you know the storyline, you know the objective. When your 4H shifted bearish here coming down, you know that it's coming for this inducement or for the structural inducement, right? Once it has been swept or it has been mitigated, now you anticipate that okay, price is going to reverse. Now when CRT gave you a confluence here, let me zoom in so that you can see the details of what I'm trying to explain. When CRT gave you a confluence at this strong low, now the turtle soup candle has already closed inside. Other confirmations you're going to see is that the turtle soup candle must come from a 4H FVG. If the turtle soup candle did not come from a 4H FVG, that shows you that okay, that circle is not high probability. It must either come from a 4H FVG or it come from a rejection block or a liquid or a key level. You're going to see a key level there. If there is no 4H FVG, there should be a rejection block here holding price or a liquidity level. You must see a very important level where the turtle soup candle will tap before closing inside the range candle. So you see the continuation pattern continues. You are going to continue to see a 4H FVG. So for a CRT to be high probability, it means the turtle soup candle must come from a key level. You can see in this case, This is a rejection block in this way. This is the range candle. This is the Totosu candle. The Totosu candle, look at the wick of the Totosu candle. It comes from a rejection block. So if you see a sell trade this way and it's in line with 4H, maybe the 4H is bearish, you see a rejection block this way and price come back to mitigate a rejection block like this and it closes inside the range. This tells you that this setup is high probability. So the next thing is for you to wait for price after the closure, wait for price to retrace to the midpoint of the week, right? Before uh going down, before going, if it is in line with 4H, so you should say that okay, the price is going to surpass the range. But if you are trading it against 4H, always be cautious. Once it gets to middle of the range, if there is M15 FVG, there is high chances of it reversing. But if it is in line with 4H, let's say 4H is bearish, then you can continue with it downward. So all in all, what I'm saying is for a sell trade to be high probability, it must come from a key level. The key level can be a liquidity level, it can be a fair value gap, it can be a rejection block, it can be an order block, it can be an order block. So always take note, your CLT Totosu candle must come, most attempts is from FVG, 4H FVG, 4H FVG. Once I go to the live chart, I'm going to show you an example. Or if you are trading it as a counter trend, right? If you are trading it from a major high, let's say it is uptrend and you're trading it from a major high, then you should expect it to come from a previous liquidity level like 4H, right, for it to be effective. And you can also see it coming from a rejection block as well. So let me give us some examples. At least you have understand what structure is all about. So look at this one. This is a bearish order flow, right? See, this is a weak low. It is a major low, able to sweep liquidity here and here, right? But at the same time, it is weak because the order flow is bearish. This is 4H. So price move from a weak low, a weak major low, able to sweep liquidity, then tap on a fair value gap. It tap on 4H fair value gap. You should see your CRT confluence here. Once CRT give you a confluence to join this trade, then you can join this trade. So far you see that the CRT Totosu tap on this fair value gap. And you can also see CRT as price continue to, it's not that you must for you to wait for these strong highs. As price is moving down, you know the storyline, you know the objective of price. If you see CRT formation as price moving on, you can always bank on and trade it in line with 4H. That is the one that is high probability. All the ones you are trading in line with 4H, if you can't wait to see a transformation that is in line with 4H and you want to counter trend, ensure you are always monitoring that trade. And once it gives you profit to the half of the range, you can exit. Because if it is against 4H, maybe you are trading an internal structure like that, and internal structure can reverse anytime. So, but since you know the storyline and you know the objective of price, then you can always follow price in line with 4H. Any sell information you see or a reclaim block entry, you can always trade it in line with 4H. So you can see all these strong lows, they tap in 4H fair value gap, 4H fair value gap before reversing, 4H fair value gap before reversing. So let's move on to what's it called, the live market, so that I can show you what's it called, some of all these things I've said in the live market. Okay, this is volatility 75 1x. This is volatility 75 1x. I have already marked some of these things out so that we just go straight to show you how you can use CRT fused together with structure to trade the market profitably. This is the edge I want to share with you. So you can see, first of all, let's look at the bigger picture from daily time frame. From daily time frame, let's look at the bigger picture. Let's look at the bias of this market. So you can see price from the daily time frame. You can see that price is bullish. Why is the price bullish? From this place, this is a strong low. This is a strong low formation, right? This is a strong low formation. So it's able to take out this high. Not able to take out this high doesn't make it bullish yet. Price tap on what's it called, daily order block, right? Price reverses. But if at the beginning the bearish trend will continue, it's supposed to break this strong this low, this major low, but it didn't break it. Price go on to break this high again. Price go on to break this high. So that tells us that at the moment, the delay is bullish. The delay is bullish, but we're not trading the delay time frame. We are focusing on 4H. So as price gave us this what's it called, this major low here, So it has changed character. There's a market structure shift there. So let's look at 4H and see how we mark out structure and how CR2 formations give us confidence to enter to trade in line with the 4H. So look at this place. You see, this is a fair value gap. This is a 4H fair value gap, a 4H fair value gap. The letter M, I say you should be picturing your uptrend with. Let's mark it here. Let's assume, see, price move this way. It created a pullback. It created a pullback. It break that high, then come back to create this low. This is a strong low formation, right? Let's pull this out. We can see that this is the letter M I'm talking about. You can see the letter M. I believe you can see what I'm talking about. Let me mark another one. This is a strong low formation, right? So we see price move on, created this high, a valid pullback, created a major high, right? Then come back for a strong low formation before moving high. Let me put this one out too. You can see this another letter M formation. Let me just put it here so you can see two M's on top of each other, right? So these are you're going to picture price movements to get your head around what's it called uh, structure. Now from here, price created this high. This is a minor high. It created this inducement. Now created this major high before coming for a strong high formation. Now let me stop here. This is another letter M going up. Can you see it? So what you're going to be doing is you marking out, right, the points where market sweep the minor high, minor low, when price sweep the minor low, so that when price sweep the minor low, you should expect CLT formation there to give you a confluence. Or if you didn't see CLT as a confluence, you are going to see reclaimed block as a confluence. And how you're going to see it as a confluence, see what I marked out here. See, for if you have gone through the video of CLT, you see that here price sweep this low, right, and it created this long candle range, and this candle here closes. I won't be able to go to the M15 to confirm the entry, but you see, let me mark it out. This is our candle range here. Look at the candle range here. This is our candle range, this is our candle range here, and this is the range. This is the turtle soup candle that sweep the range candle and closes inside. So here now you can see that the total candle come, it tap on this fair value gap. This make this CLT high probability, and you can see that as it closes, price come back before it continue moving further, right? So this is how you're going to mark your structure. Price will, after creating a major high, this major high is a weak high, but this major low is a strong low. So you are trading from a strong structure to a weak structure. Now maybe you should write this thing down as a guideline or as a rule. Always trade from a strong structure to a weak structure, so that you should always be at the right side of the market, right? That's just trade. Whenever you see your 4H going, trade in line with it until the objective is complete. Until the objective is, and how are you going to know that the objective is complete? Go to your daily time frame, look at the market structure. Price is fractal. The fractal relationship between different time frames, right, is going to lead you to how you're going to do your multi-time frame analysis. The fractal relationship is going to lead you to how you're going to do your multi-time frame analysis. When you go to the daily, check where is the daily heading to. So when you know where daily is heading to, and when you come back to 4H, you should be able to understand, okay, from my storyline of where daily is going to, it means my M4, my 4H that shifted bullish now is going to mitigate this supply level, or is going to mitigate this liquidity level before continuing with the pro daily trend. Or my daily is bullish, it means this 4H that shifted bearish now is only going there to mitigate this level before moving before turning bullish back. Just like I said, that the minor trend is shifting bullish bearish, is going to it's just telling you to facilitate, okay, it's facilitating the counter trend pullback of the major trend, in this case daily. Now we see here, for now daily is bearish, but that's the daily order block there. And as 4H tap on our daily order block, you see that there is a market structure shift. So what I'm saying by objective being complete, this 4H that shifted bullish here, it means the objective is just to come and tap on this daily order block before continuing with the trend. But in this case, as it changes, there is internal structure, internal shock, that is internal market structure shift. It did not break this. It turned bullish because it later come back to take out this high. But let's continue with how you're going to mark it as relate to our edge and how you're going to trade it with CLT. So after we have entered with CLT here, so we can see there is no valid pullback here because this is a long candle and this candle, their internal structures. If you know dependent and independent candles, if you don't know about dependent and independent candles, you can also go back to our Telegram, search for any trades, search for some of the videos we posted there. That was last year. uh, Learn dependent candle there, learn about independent and dependent candle. You can't trade dependent candle as CLT. You can only trade independent candles as CLT because it is independent candles that have liquidity on top of them. The dependent candles are useless in structural marking. So please do not try to trade dependent candles as CLT. Dependent and independent candle is another thing entirely. We are not here for that now. But if you want to know about dependent and independent candle, go to those videos we posted last year. I think that was last year around May. You should be able to understand dependent and independent candles. So always trade dependent candles as CLT because they are the ones that have liquidity on top of them. The dependent internal candles does not have liquidity. So there is not any fear, there is not any value pullback here. The only place that we can experience the value pullback is here. So I have drawn the M before. This is a minor high in this case. This is a minor low. Now this is a major high. But the major high now is what? Is weak. There is no CRT confirmation here. If you go to M15, you may see a reclaim block. You can decide to counter trend it in form of reclaim block just for you to come and take care of this liquidity level. So, and as you tap on this fair value gap, there is no CRT confirmation here, but you can trade it in form of reclaim block. You don't know what reclaim block is now. Our subsequent videos is going to explain how you're going to trade this in form of a reclaim block. Now, the next range, price move like this, it created this low. This is a minor high, a minor low, inducement, minor high, minor low, a major high. Why is it a major high? It's able to sweep liquidity. You can see that this high here did not sweep any liquidity. It's only mitigate this, right? So, but this high is able to sweep liquidity of this, then also break. That is, you break this break now is liquidity sweep. Just like I've explained that it can be a break, it can be a sweep to the opposing side. And this is a strong formation. It gives us CLT as a confirmation. How did it give us CLT as a confirmation? For those of us that watch the video, you can see that this candle closed inside the range candle. We can take this as our range candle, and since it's in line with 4H, it retraces to the midpoint of the week, and we are going up. We are going up. So this one is just to tell you how to mark the structure and how to use CLT as a confirmation, right? We are not here to mark CLT. You have understood how to mark CLT. You have watched that very first video. So, and the trend continues like that. This is how you're going to be marking your trend, your structure. See, a minor high, a minor low, right? Okay, here there is no significant pullback to create a minor. Or this is a straight leg. Yeah, this one created a valid pullback. This one created a valid pullback, but this is a rejection block. The only place we have a major high that is able to sweep back, come back and sweep liquidity is this high. You can see this high did not sweep any liquidity. This high did not sweep any liquidity. Yeah, this is the only eye that come back to sweep the liquidity of this low. Then this is strong low confirmation that you can trade in line with 4H, and definitely it didn't give us CLT, but you can trade in form of reclaim block. That is why this eye came back to the midpoint of this low, and it moves to give us this high. Now as soon as you tap on this block, this other block, now we should know that okay, the objective is complete. The objective is to come and mitigate this daily order block. It has tapped on it and is rejecting. The objective is complete. We should be cautious here because some people will now, okay, since it's going up now, and they say we should always follow 4H. Now let me continue to trade this. Let me continue to trade this. Now it has tapped on the daily order block, and the daily time frame is bearish. So for that moment, you should be cautious. And you see, as price come back, it wasn't able to create a new high again. It changes structure and it changes direction. Now I said this is a strong low, right? All this one, they are strong low and they should hold. A strong low is a low that should hold and not be broken. But look at it here. The only time a strong low should be broken is when market wants to change direction, and that's why we have market structure shift. So when a strong low or a strong guy has been taken out, that confirms market structure shift or change of character, as you may call it. So we have market structure shift here. This high, this is a sweep, this is a sweep here, right, with a wick. It created a high. This is a major high, a strong high now, a strong high. All our lows now will be what? All our lows now will be weak because market have shifted structure. All our lows will be weak. This now is strong high. So coming down, there is not any strong high created. This one here just mitigates and break structure again until this place, this low take out this high and created another strong high. And you know that this high, it gave us a shouting confirmation. I believe we can see it gave us a shouting confirmation closes inside this range candles. Now what is the confirmation that is going to be high probability is coming from this rejection block. It's coming from this rejection block. We can trade it in form of CRT. We know already how to enter. If we enter, you can see that it come back to the midpoint of the range. It does not come back to the midpoint at least, but it retraces as I've explained in the CRT video. So that's a confirmation to continue with the bearish trend. Now tapping on this, there is a fair value gap here. Price has already tapped on the fair value gap. We don't know yet if it's going to break this structure. So here, but it has already tapped on the fair value gap. We need to be cautious. The objective here may be to just tap this liquidity and continue, and that's exactly what price did. We tap on this liquidity. There's no fair value and there's no CRT confirmation, but we can use reclaim block. When we get reclaim block and other PDRAs or BPR, when we go to M15, we understand how we can use it as entry. So it continues. But the purpose of this video is for us to understand structure and what the price did here. This is a valid pullback, and this is a valid pullback. This is a structural low now. This is a structural low. You can see price going up. It does not create any significant pullback here, but it created a breakaway gaps, and at last it created low. It gave us a major high. The major high come back to sweep the low, and this low is tapping on 4H fair value gap because this is 4H structure. This is 4H time frame. So the rejection block, this candle, this rejecting candle that closes inside the range is coming from this fair value gap. That tells us that we can treat this as CRT in line with 4H. So we can bank on price here and trade it to this high. You can see how structure can help us frame our entries and always be on the right side of the market. So after getting to this high, you can see that this high is from this fair value gap, so this high is from this fair value gap, and that gives us a potential. Okay, price can reverse this, right? So in 4A, these ones can also be internal structure. We can as well trade them. You see, when price reverses here, there's not any significant low because this low did not give us it wasn't able to take out any liquidity. So this is a complete straight leg, right? This is a complete straight leg. This is a complete straight until you take out this structural inducement, and as you take out the structural inducement, it can give us what's it called? Reclaim block entry here on M15 in form of inverse FVG with PBR. We can trade it, but here it did not give us CRT. But we know that this is a strong formation because it has already taken out the structural inducement, it has swept it, and price going up, there's any significant pullback. So we'll just be looking at price. There's no any significant pullback. There is a pullback here, but there is no any fair value gap to confirm this a high probability entry. So we might just risk, if you want to trade, you might risk it. But okay, yeah, it confirms CRT, but this CRT is not coming from any. This is a breakaway gap. This is, but it didn't tap on the fair value gap. For it to be high probability, let it tap on the fair value gap. It didn't tap on the fair value gap. Price may reverse this again to come back to that fair value gap. So that's it. Now all this one we can call it internal structure. Price reverses to take out this low, but taking out this low now, it gave us a CRT confirmation, a very clear one. So we can bank on price here and trade it as CRT going up, right? And trade it as CRT going up. Price come here, come back to mitigate this other block, and as it mitigates this other block, we know that temporarily price is bearish, is bullish because it mitigates on this liquidity level, this point fair value gap, and it reverses. And ever since it reverses, it does not break this strong low again. So we know that it keep on creating higher low, higher low. So we know that price is bearish. Any CRT confirmation that we have that is going up, we are sure that from the storyline that we have, and the price objective is going up for the moment, because since it retraces back and tap on this low, this liquidity level 4H fair value gap here, it has not break this low again, so it's keep on creating uh, higher low, despite the fact that it has not taken out the main high here. But come and look at where it take out the main high. At this juncture, is able to take out the main high, it retraces, but period to this time, it reverses here, it gives a value reversal here, and this reversal come to a fair value gap, right? It comes to a fair value gap. It gave us CRT confirmation. See the candle closes inside the range. We can trade it in line with 4H. We can trade it in line with 4H going up, because from the storyline and the objective of price, we know that it's definitely going to take out the weak eye. We know that it's going to take out the weak eye, and after we can trade it. If we trade it to this eye, this is a strong eye formation. We can decide to counter trending it to come back to this fair value gap again. It gave us another CRT confirmation, a very strong one. You can see to the extent that there's not even reversal to the midpoint of the week. So if we are able to get an entry, or this one now, it can be in form of reclaim block, we will trade it to this last high. This last high it gave us, it has already break structure, and we know that after every structure break, especially major structure break, we expect a reversal. Price reverses and cause market structure shift. But mind you, we still know that, okay, from the storyline, even with this market structure shift, the daily is still bullish until it take out the daily strong glow. That's when the bearish trend, what's it called, comes in place. But so far it has not taken out that last bearish, what's it called, strong glow. We are still bullish. And what the price did here, price come back, um, it mitigates this level, then here it wasn't able to sweep this liquidity, but it take out this low. But we are trading 4H actually. We are trading 4H. Here price reverses, tap on this liquidity level. We can decide to join this one with what? Since I tap on it, we can decide to trade this one down with a claim block if it give us the entry on M15. At the same time, price reverses back, it tap on that liquidity level again. That is the fair value gap, and at the same time it reverses back as well. Here it gave us CRT confirmation, right? So here, as we trade it down, this one now, they are not able to break any structure. These are internal structures, until it created this last high low, and this last low created internal market structure shift. So as it created internal market structure shift here, it created this low, a internal low, right? Wasn't able to sweep any liquidity. So this is a minor high, a minor low. Create this high too, we was able to take care of these lows, but coming down wasn't able to sweep any liquidity. That's make it an internal low as well, until it created this last high, and this high is a major high. Why is it major high? Able to sweep liquidity here, and also come down to sweep liquidity of this low. But period to movement, we won't know whether it's a major high yet, but it tap on this same fair value gap. It give us CRT confirmation, and you can even see that we traded that with CRT, which gave us a nice entry downward. And as it come down, right, it sweep liquidity. Sweeping this liquidity, that's another entry, because we still know that, okay, daily is still bullish from the storyline. Now sweeping this liquidity is going to give us a reclaim block entry here. When you get to reclaim block, you understand it better. Now giving us sweeping this liquidity, we know that, okay, this is a strong low formation going up, and that's how price reverses bullish, confirming the daily pro trend continuation upward, right? So, and as price is going up, give us series of internal high, internal low, internal high, internal low, until it gave us this high, and this high come back to sweep this liquidity here. Sweeping liquidity giving us another strong low. So far price has not sweep liquidity, there is no way you can know whether that low is strong or is not strong until it sweep liquidity. Once it's at sweep liquidity and it reverses, giving you inverse FVG, or price reverses with the CRT confirmation, that's when you know, oh, this is a strong low formation, and you are ready to join to trade it going in line with the 4H. So price sweep liquidity here, it gave us CRT formation, we traded it going up, you see, until come back to tap on this rejection block. The price is still bullish, but it reverses, causing market structure shifts. Causing market structure shift doesn't mean the daily has turned bearish until the last low, the last strong low has been taken out. Still, it come back to sweep this structural inducement, So, and after sweeping this structural inducement, it gave us another strong low formation. It's like my pad, my what's it called? The battery is in the is charging what's it called? Mouse, and the battery is down, so I'll be using my hand on the pad now. So after sweeping this structural inducement, you can see that it gave us another strong low formation from where I just tapped now. Then it gave us a CRT confirmation, a very clean one, Then we enter from there and it continue going up. So this is how you're going to frame your entries, fusing CRT with reclaim block together in line with 4A structure. But the basics is that you must understand how to mark your structure properly. If you understand how to mark your structure properly, then you now use CRT as a confluence to follow the structure. You can trade in line with the 4A structure, that's high probability. You can trade against it. But anytime you're trading against it, ensure that price, the total candle of CRT must tap on a key level, and it has given you a full confluence that, okay, this tapping on this key level, I am ready to reverse. I have told you what are the things you're going to see if price is reversing when CRT gave you a confluence. Closing of the 4-inch candle inside the range, the total candle, how it's going to look like, the reversing part of it, the retracement going back to 50% or 75% of the what's it called, the wick that sweep the range candle. All right, this is how you can use CRT in line with 4H, trading it in line with 4H structure to frame entries and always to be at the right side of the market. So if you are not trading it in line with 4H, if you are not trading CRT in line with 4H, maybe you are not considering structure, you might be always be at the wrong side of the market, or you'll be having wrong expectation of price. So for you not to have wrong expectation of price, ensure you have a detailed knowledge of structure the way I've explained it. I would have liked to go to another peer to give us more explanation, but the way it is now, my battery is down. I mean, the battery of my mouse is down. I need to go and plug it to charge it. I've been using it since morning. I didn't remember to plug it prior to starting of this very video. But let me see if I can open another page at least for you to gain more insight on how to mark. You can see that it's not moving, on how to mark structure properly, so that you will always be at the right side of the market. So this is jump 25. This is jump 25 index. Let's see if this mouse is not going to wave us, but if it at least we have explained enough. So let me just give us let me see if I can move. But if it doesn't respond again, I think I have to end it here and please end this section. So this is basically how you can fuse CRT together with structure to always be at the right side of the market. Yeah, my mouse is down. Consider it's not even, let me use my hand. Okay, let me use my hand, but you will not be seeing my cursor. Okay, let me just explain something here, at least you get some basic details here. So trading CRT in line with 4H. This is 4H, thank God. There's no need for us to change it, because without mouse now we may not be able to move the chart properly. So just look at this very end. Look at this very end here. Let me start the marking from here. Price going up created that impulsive move. The impulsive move created a minor high, minor low, created a major high. The black dots are the major high and low. So that major high come back to sweep liquidity of the previous high, of the previous low, and you can see that it's coming from a key level. That is an hidden order block on 4H. There is no fair value gap there, but there is an hidden order block. If I turn it to M15, you can see the clear order block that is there where price respected. So, and as price tap on it, it created you can see, let me zoom it created a wick, right? A rejection, it rejected up, almost closing inside the range. So price come back to the 75% of that wick before moving further. This is a clear, clean CRT entry. So we can join price there because CRT has given us confirmation to trade it up in line with 4H, and that's why you see this is strong low formation now, and price move up. Price moving up. This there is no valid. Okay, this is internet candle, but okay, there is a valid pullback, but there's no any sweep of liquidity, so it created this high. This high too wasn't able to sweep liquidity, only mitigate it. So all these on their internal structure, So coming here, this is where we have a major eye right here. I will just manage this mouse till I'm able to at least explain this second pair regarding this structure marking. So it created a new major eye. This major eye now moved down, right? It gives us this low. This low is able to sweep liquidity, but this low being able to sweep liquidity, we know that okay, this is a strong low formation because able to sweep liquidity, but going up, it only mitigate, it did not break any structure. If we had when we enter this trade here, thinking okay, did not give us CRT as a conference. Maybe on M15 now, it may give us reclaim block entry. I don't know until I turn it to M15. We can see that it only mitigates this high, coming back, create a minor high, created a minor low, and it come back to sweep this liquidity again. It come back to this other block. So that's to tell you that these two lows here, there is liquidity under them. Almost these two equal lows. Price come back to sweep liquidity, tap on this block before giving us reclaim block entry to trade this higher. In both cases, there's no CRT confirmation. For those of us that watch the video on CRT, there's no CRT confirmation, but this last low was protected. This last low was protected and it created this low. So in here, I believe there should be a kind of a claim block entry here on M15. Once we see it on price like this, once we go to M15, with this bullish change in state of delivery, we should be able to find entry, right? Because we know that okay, this is our last strong low and should be protected going up. Excuse me. So here, price created a minor high, a minor low, inducement, and going up. There is no any significant pullback. All these one they are minor structures until it created a minor high, a major high right here. Until it created a major high here. Until it created a major high here. Yeah, that place. The mouse is no longer moving. So this major high pullback. Did it give us certain confirmation? No, but we should be able to find a reclaim block entry there. Then price come back to this to come and sweep this minor low, which is inducement, or we can call it structural low in this case because there's a series of internal structures there. So you sweep it and price tap on our FVG, our 4H FVG here. There's no salary confirmation here, but I believe there should be a reclaim block entry on M15, so we can trade it because this is a strong low, and we are trading from a strong low to a weak high. Strong low targeting a weak high, and once we enter from here, then yeah, from here we can bank on price and trade it in line with 4H going up. So as my mouse is not moving, I'm just trying to explain so that you can get details of how you can mark structure. You see going up, you see how I mark this minor highs and low, and also marking the major highs and low. And we're trading from the major high. Just all the black dots are the major high and low. The ones I did not mark are the minors. So for you to confirm a strong low, it must tap on a key level. Here it tap on a rejection block, it tap on a other block, it tap on a other block, and before tapping on them, they sweep liquidity. Hope you can see. They sweep minor lows going up. Before tapping on them, that's a confirmation for it to be valid. They sweep liquidity just before tapping on those lows. If your strong low that you mark did not sweep liquidity period to tapping on those key levels, it makes it low probability. It makes it low probability. So let's come up here. Let's come up here. You can see the same thing here. Now all this long move is a single leg because there is no any significant reversal to tell us, okay, this is where price sweep liquidity or the previous structure. It is a single leg. Price just creating minor structures within. It's a single leg going up, not until price even this reversal, price just reverses and didn't sweep any liquidity. You can see this independent candle is going up. There is no any value reversal here where price come below you to come and sweep. So the only place price sweep and sweep liquidity and tap on the value structure is here, and you can see I marked the strong high there, the major high and the major low, and as a sweep liquidity, right, you tap on that rejection block. So I said for your strategy to be valid, the total sweep candle must come from a fair value gap or from an order block or from a key level. In this case, that rejection block. Just above it, here is sweep liquidity and tap on the 4H fair value gap. It gave us a clean CRT confirmation. We can join the trade going up. Now creating this high, price change structure, right? There's a market structure shift, and coming down, you can see as the market change structure, coming back, retracing up, there's no any value structure. Price is able to take out. I'm talking about this place. Yeah, talking about this place. It only come back to mitigate before price reversing. The only place it gives us a strong high again, and it even mitigates the previous high up is here, and after that it breaks this low, and you can see this leg there's no any valid reversal. Price this all this move is a single leg downward. It's a single leg downward. So but you know that okay, price has already shifted structure. If you find any CRT confirmation, any CRT confluence here, you can trade it in line with 4H going down, and here coming it form a strong low with CRT confirmation. Then you can enter and trade it up, and you see as we enter with CRT going up, it reverses, right, create these internal structures and internal market structure shifts, taking out this high. As created internal market structure shifts, it gave us a major high, come back to sweep the low. The low tap on this key level, that is a breaker block there and hidden order block. Then it created another CRT confirmation. After sweeping of that liquidity, it come back to the 75% of that week. We can enter and trade it up. You see, I'm using my hand to tell us where I'm talking about, so we can trade it up like that because there is internal market structure shift already, which is bullish on 4H. So this is now here is this place. This is a minor structure. There's no any as price retraces, there's no any liquidity sweep. So this is an inducement. Now break structure, break high, previous high. This high too is a minor high because no liquidity sweep coming down until it created this major high. This major high now come back and sweep the two lows created, and as it swept the two lows created, we tap on our 4H FVG. Tapping on 4H FVG, it didn't tap it fully. It retraces back small before come and tapping it finally. And now tapping it finally, there's no CRT confirmation after tapping, but you can see reclaim block entry on M15. So this is basically how to mark structure. It's how to mark structure. Since I'm using my hand now, it's becoming like difficult to move the screen. But at least with this explanation on the live market, you understand the basic idea how you can use structure marking, correct structure marking with CRT and the same block to always be at the right side of the market. How to always be at the right side of the market. All right. So I said always know your story, know the price story. Go back and so that you can at each phase of the price movement you know the phase the price is. Know the objective. If you are marking your structure on 4H, I would recommend you to mark your structure on 4H. But as you're marking your structure on 4H, know your objective of price on the daily time frame. If the daily is bullish, then coming to mark your structure on 4H, you should be able to understand, okay, what is the objective of price in this phase? Where is price moving to? Where is it mitigating? Where is it? Where is the liquidity? Which liquidity is it going to take care of? Right? Is it internal, external? After taking care of internal, where is it expected to move to? That is the storyline I'm talking about. So once you know the storyline, you'll be able to know the objective of price at inch phase. At inch phase. And I also made mention that okay, there are some times after price sweep liquidity of the inducement of the minor I, there are some cases we do have structural inducement, and once there is presence of structural inducement, price will, especially in indices that we're trading, price will come for structural inducement if it is or if it is uptrend before moving higher, if it is downtrend before moving lower, right? So I believe we should end this second video on structure here. This is basically all what you need to understand with regards to structure. If you don't understand structure, believe you me, there's no way you can trade the financial market profitably. So this very video, take it very serious. If you have not understood properly what I share with you here, I want you to come back, watch this video as many times as possible, watch as many times as possible until you are able to understand everything in details. The more you watch it, the more clarity you get. The more you watch it, the more clarity you get. Believe me, the more you watch it, the more clarity you get. The more you watch it, the more clarity you get. So try as much as possible to watch it as many times as possible until you're able to get your head around this major high and low and minor highs and low, right? Major highs and low and minor highs and low, and how you were if you until you're able to get your head around this, and how you are also how you will be able to form what's it called, the storyline, the objective at each phase of the price and movement. All right, so the next video is going to be on PDRs. The next video is going to be on PDRs. After watching this video, try to understand everything about structure. Once you're able to understand everything about structure, you see I've been mentioning reclaim block since then. You don't know what reclaim block is. The next video is going to take care of reclaim block, and also is going to dwell more on the CR3 entry together with reclaim block, right? So go and practice how to mark structure consistently and give me feedback. If you, let's say this video you're watching now, maybe a friend sent it to you and you do not know anything about you do not belong to our community, you can see my contact at the bottom left hand side of your screen. You can dial me if you have any question, any clarification you want to make. You are free to dial me. Also, we have at Zenith Trades, we have the Allied Traders group and the Pro Trader group. Everything about Zenith Trade at the moment is free. If you want to be part of these groups, there are criteria you need to follow. So, and you need to qualify before you can be a member of that group. So you can as well dial me on my DIME WhatsApp. You can see the number at the bottom right hand side of your screen. Dial me so that I can tell you what you need to know, what you need to do to qualify you to be a member of that group. And as I've said earlier in the previous video, being a member of that very group is important. Is going to add to your what's it called, because any trade that you take, let's say you take trades and you do not review them, there's no way you can grow, there's no way you can progress. But if you take trades and you review each of your trades that, let's say, went south, each of the trade that it SL, there's somebody there to review it for you. Is going to hold you by the hand, review all your trades, and by doing that, it's going to help you to grow faster, right? So the difference between someone that is not profitable and is trading for, let's say, months, years now, and you that just started out and you are seeing results step by step, as in small one, is that okay, each of the trade you are taking, you are reviewing it and asking yourself why did I lose this trade? Why did I lose this trade? So if you are journaling all those mistakes down, believe you me, it will be keep compounding, and you will not. A time will come, all the mistakes you are making during trade, and for you to lose those trades, they will become very very little. If you even get a term before you made a mistake, will be very hard, and that term, that when profitability will set in. So for you to be a member of that class, those groups, there are people there that will attend to you, review your trades for you. Just dial me, I will let you know the criteria. Everything is free, so you just need to qualify for certain things for you to be a member of that group. So watch this video as many times as possible to get clarity about this, and if you want to set your synthetic trading view, you know, it's different from currency, you can also dial me. I will send you the link to it, X trade, a trade on Twitter that will guide you as well. So, and I will attach the PDF material to this video. The PDF material is going to guide you. You are going to read it to get more clarity about what I've just explained. Basically, everything I've explained in that material. So I'm going to attach a PDF material to this video. Try as much as possible to lay your hand on that material. Read only page 5 to 12. Read only page 5 to 12. Read only page 5 to 12 for you to understand structure. Read only page 5 to 12. The moment you see this video, a material will be attached. If you are seeing this video in the future and you also need the material, message me on my WhatsApp. My number is at the bottom left hand side. Just look at my number there. Message me on my WhatsApp. I will send you the material. If you read that material, you watch this video, believe you me, you will get this about structure. That material is going to help very well. Alright. So I think that will be all. Practice consistently. For you to become a pro trader, you need to be committed. You need consistency. You need to believe in yourself that yes, these steps I've taken, I need to what, to be committed and need to be consistent. It's your consistency that will give you the result you're looking for. If you come here today, you are here, tomorrow you are there, and just haphazardly, believe you me, the destination you're hoping to get or you're hoping to reach may take you a very long journey to reach. But when you're consistent and you show up daily, then the progress, the improvement you need may come handy. So I'm advising each and every one of us to be committed, to always look at the videos and all the materials we're posting inside this group if truly we want to grow very fast. So, and I believe as we do, we will see the result we are supposed to get. So I'll be ending this section here. Do have a nice day. All right, till we meet in the next video, which is going to be on PDRs. Bye.